Hello and welcome to another episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Woo. Links available in the description below. Do not keep any more funds that you need for trading on any given exchange. The whole point of leverage is to allow you to reduce your counterparty risk. Classic terms and conditions apply. Speak to your doctor. Am I missing any, Don? I think that's a pretty comprehensive list.
Well, that's
Consult
all right,
your
yeah.
physician before taking any medication. Not legal advice. Past performance does not guarantee future results. Your
Yeah,
mileage may vary.
if it stays up for more than 8 hours, go to doctor, right?
Yes.
All that kind of typical stuff.
Perfect, correct. So with that out of the way, it's a good month for monthly time frame respecters, Don. Now, I know you've sort of oscillated between fuck the monthly and the monthly is actually based, but this is one of those instances where you have a monthly close at a monthly level, and you only get 12 monthly closes per year, if my complex maths is correct. And not all of those closes take place at monthly levels. So I feel like we're quite privileged as monthly time frame respecters to be living in the present. What do you think of that?
Yeah, I mean, technically last month, I would say it also closed kind of at resistance, like at 35K.
Yes.
So now what we did basically is just kind of we went to the upper end of that whole thing, which makes I actually preferred it last month just based on the fact that you could have had a clean rejection. That's a clean signal. Now this month, the chart looks better, which is good. But you don't have a clear, as clear of a picture, in my opinion, because what you can do basically, like we closed around 37.5, right?
Yes.
But what could happen is that basically it just pulls back this month to 35. And then you're trapped in between like support and resistance.
They won't trap me, Don. What do you mean?
Yeah, cannot be trapped.
No, we're not doing that again. I think that was enough. Are you talking about the 37.2 monthly level? Like the other side? Yeah, so I had a question about this because you have a habit of sometimes, pulling levels out of your ass or coming up with them very creatively. There's a lot of artistic license involved. And granted, the whole premise of TA is fucking absurd. But you take particular liberties with this and you sort of sneak them in as if no one would fucking recognize on a monthly chart. Like, you can't do that. There aren't enough candles, Don. It becomes obvious. So this is just like when you were buying 16K. If you listened to you the week prior, you were like, yep, no levels here. And then magically, when you went all in, this fucking random weekly support appeared. Go figure. So I'm wondering how serious is the 37.2 monthly level compared to 35? Or, where does it come from? How important is it? And we still closed above it is the other argument, right?
Yes. Like in general, I think it's much it's more bullish now than it was last month. Like this.
That's because it went up, Don.
Yeah, it's a considerably better close, in my opinion. And you can honestly, you can just ignore 37.2, 3, 4, whatever you want. It's just for me, given I want to be sidelined anyway, it's a convenient excuse to just not do anything. For me, in general, also, if you have these kind of monthly levels and you close $100 below or above, it's still a close at resistance. Same with support, right? Like if you undercut support a little bit, but it's just by 100 or 200, and you have to literally zoom in so far that you can only see the current candle. Like those $100, $200 don't make a difference. So yeah, I think 37.2. Like I have it on my chart, dotted.
That's what I did before you even said so. Look how cute that is. You said romance was dead, man.
Yeah, true. No, but anyway, so I wouldn't take a trade off of this. Like I had a bunch of people ask me on Wednesday, the last stream I did, like if I would want to short, and I said no, I don't see the point, because there's not really good setup. My general problem in this area is that I don't have a good setup, neither to the downside or the upside, right? Because you kind of reclaimed the range now, and we can kind of like assume that we did, given we closed above the most important kind of range low.
Sure.
But also, like if you just look at the monthly time frame, you can draw a million resistances here, right? Like we talked about this on a previous show. You can you can draw a resistance at on the candle from the February of 2022, or like even cluster out February and March.
Yeah.
Like there's a shitload of stuff that you could do in this range. I think it's mostly cope. Like a bunch of bears are basically like coping, drawing like levels, and you can do this all the way up. So I don't think that's necessarily a good exercise. So I would say the monthly is the way it closed, right? This is a decent close. I wouldn't necessarily say it's like the most bullish thing ever, but it's a decent close. It closed above the range low. It did what it needed to do. My problem is now like, okay, it did, but where do you buy this thing, right? And I kind of have troubles in this kind of area. Like I just don't see a good area to buy, and this is mainly because I think you could just blindly buy this. But this rally is news driven, right? Like this is ETF news driven, and then I have big problems buying into like into reclaims or whatever, just based on the fact that news driven rallies can quickly kind of just retrace what they
or
gave
buying them
you.
late is the specific problem.
Yes.
Right.
I mean, if you buy them early, right? Like if you bought at 25 and you're still holding because you're like, okay, let's see how this turns out. Fair enough, right? But if you're buying it at 38, 39, 40, I think there's a chance that even if the ETF news comes out positive, right, as in like everything gets approved, that would get a rally and then pull back to 38K again. So like that's kind of the thing where I struggle. I could see short-term upside, but the news thing is just kind of looming over our heads, and the market more than doubled from the bottom. So I'm just kind of struggling with that. And in general, for me personally, I've just had a really good year, so I'm just like, fuck it. We'll see how this whole news event plays out. I'll see afterwards. And I think my base case, right, for the ETF, is that we're gonna get this. If it like, there's multiple ways to go about it. Obviously, like either it gets approved, and then I think you're gonna get a spike, but I think that's gonna get retraced in the days following. And then it might actually like proper nuke, as in nuke, just go back basically where it is right now, 37, 36, 35. Because I think a bunch of people are basically, no one wanted to sell, and because you have a clear catalyst coming, and those people that kind of, or like a lot of people wanted to sell, but they wouldn't because it's just not smart, right? This is the argument that I made at 25, 26, 27, all the way up to 37.5 till I sold, right? Because why the fuck would you sell if you have this big narrative that's kind of supporting price, and where buyers are gonna kind of gobble up every dip, and you just kind of sell to people that are willing to take it higher / sell into the news pump. So that's kind of like, that's been supporting price. But the moment that goes, I actually think we could see a substantial pullback. And that's in the positive case, right? In the negative case, if everything gets denied, I think there's a good chance we're going to go significantly below 25. That's where this rally came from. Like the whole narrative started at 25K. If it gets denied, and I think that's very low chance that it will get denied, but if it does, I think you're going to trade into 20K. So either, like in either case, the news side of things is starting to get a little bit more dicey. Now, obviously, you still have a month to go, but yeah, it's basically like it's year end. If you want to speculate on like a pump into year end, I think that's okay. It doesn't look that bad right now, but I'm just kind of like, I'm quite happy with everything, with how this year played out, and in general with de-risking into the news, so to speak. It's been, when was it announced the first time?
Oh mate, it feels like 2 years ago or something at this point.
Yeah, I think it was June of 23.
Something like that, mate. Yeah, it was like 24K BTC, right?
Yeah, and then it went all the way back to where it started, basically,
Yeah.
and then went up. So I think that's been 6 months or something.
Man.
I've kind of been trading that narrative for 6 months, right? Like I had the whole, okay, 16K is the bottom narrative, then it went up, and then we got that on top, and I've had enough personally. It's been a long year, and I'm happy to call it a day on that.
Yeah, I think that's pretty reasonable. As soon as I'm done with this Litecoin halving trade, I will I will rotate to the ETF announcement trade, and that's why my account is at $0. No, I think that's fair. And we sort of discussed on previous shows how priced in is the ETF news, and we were discussing at much lower prices as well that it really depends when the news comes out. You know, if it's coming out and we're still consolidating in that long range we were in the 20s, then there's more room for optimism. But if we're just like blasting through and are reaching sort of 40 plus, and you know, some of the stuff we spoke about off air, like the CME open interest being higher than Binance, etc., things like that, it's much harder to make. You know, it's much easier to make ETF-driven arguments at like 24, 26K that, hey, this isn't being priced in properly, than when the market is, you know, here, essentially. From a technical point of view, I feel like your argument for the monthly is essentially a mirror of what we discussed on the weekly. And obviously the weekly is showing the same thing. That like, hey, yeah, look, the levels are clear and the market's closed above them. But in terms of your proximity to invalidation, it's a much tougher setup than it has been in previous weeks and in previous monthly closes, right? So even if you take your granted pretty sort of conservative and even generous example of go up on the ETF news and then spike just because of some de-risking, sell the news type dynamics. From the monthly levels, we're currently, you know, 10% away from the level that we reclaimed, and that's considering zero wick, which is unlikely on the monthly. And then on the weekly time frame, it's more than that, right? Because the weekly range low is at 32K, and that would be in the region of sort of, you know, we're sort of 15, 16% away from that. And both technical bullish arguments are premised on the sort of range low reclaims, and both range low reclaims are sort of 10 to 15% away in terms of invalidation, and that's not even allowing for much of a wick or anything. So I think if you're punting on the news, and we have about a month left, right, for this window, and that's what the Bloomberg guys are saying, that we have like the 3 days where we're going to get the decision, and anything earlier is unlikely. That's, I think, what makes it tricky. You're sort of approaching news deadline season. It's harder to argue that the market hasn't priced in at least a substantial portion of it, given the price action, given the CME open interest, and given other things. And from a technical point of view, it's also hard to make the argument based on proximity to invalidation. So your best bet, I think, is you kind of have to be almost in short-term trader mode and do your lower time frame trend following stuff. And then if a bigger pullback comes, you just kind of lick your wounds on that one. But that's really the only framework that I think makes sense this close to the news, this far from invalidation, etc., etc. I think like high time frame swings into the news, and given where we are relative to the high time frame levels, is a lot trickier. I think you need to pretty much sort of compress your time frames at this stage. Do you think that makes sense?
Yeah, it does. I mean, in general, when you look at this thing, right, and I don't want to sound too bad-hearted, because I'm really not. I'm more neutral than anything. But if you look at this thing, like on just the basis of, okay, we closed the monthly above resistance. Those 10%, if you're targeting 60K, it's not that bad, right? Like you could still take that trade. The main problem I have is with all of that is basically that it's a news-driven thing. So I'm just like, yeah, I don't like that. But one thing that this monthly close does, right? Like if you kind of completely ignore 37.2, which I think is valid, you don't really have to look at that level. It's like much weaker than 35K. Is that if you get a pullback to weekly levels, which would be 32, 33K, that looks quite good. Given we closed above 35K on the monthly. So what you could then argue is that, okay, we wicked below 35, hit weekly support levels. Now you need to close back above the monthly level, and then everything looks quite good, right? So there's setups, and there's just kind of like how the market looks. And if I look at the market looks quite good in general, just ignoring everything else. The market looks quite good. The question is just like, how the fuck do you buy it without getting completely ran over by any kind of pullback? And that answer is quite a bit harder. I found it like I find setups like that I can actually buy much easier when you're not in just like in up only mode.
Yeah, Don, I was going to say earlier when you were like, I'm struggling to buy this, I was thinking, no shit, the candle is green. Of course you're struggling.
Yeah, I mean, I generally don't. I'm not someone that excels in like these kind of moves. So take everything I say with a grain of salt. But I'm just basically, I look for setups. I don't look for, okay, is the market bullish or bearish?
Yeah.
And if I find a good setup that I can trade, then I'll take it. And if I don't, I don't. And then maybe the market runs away from me, and that's okay. And then it comes back in 4, 5, 6, 7, 8 weeks usually. Just got to be a little bit patient. So that's kind of like how I look at these high time frame charts. The monthly looks much better than before. This yesterday's close was decent. In my opinion, it's still closed like at resistance, just at a weaker one, like quite massively weaker one. And if you look at the weekly time frame, that also looks quite good. I don't really have much resistances in between 30 and 60K. It's just both are, like you said, a little bit away from where you would have a reasonable invalidation. So you kind of have to bet on the fact that you have a bunch of people on the sidelines trying to get positioned for the ETF thing. And I would argue that's starting to become a quite crowded trade. Not necessarily
those sideliners aren't on the CME, that's for sure.
Yeah, like everyone in the grandma is trading Bitcoin on the CME.
Amazing.
So, which is quite cool, right? I don't think that's necessarily crypto natives. So you could argue that's new money coming in, and that's not as bearish as you usually would have something like this. I don't know how to kind of like use that information like that. The CME is just completely going nuts. Because that's not necessarily something that we've been dealing with before, right? So we're gonna just have to wait and see. If it pulls back, I'd be curious whether people actually start closing on there or if they keep adding.
Yes, or like on the news itself, or as we start to approach the final month, are we going to see open interest go down or ramp up into it, type of thing? Because I think also some crypto participants have a sort of presupposition that the CME flows, etc., compared to other exchanges, that's where the smart money is, etc. But a lot of the time, it's just like dumb money trading on another exchange. There's no guarantee that the CME punters are like necessarily super knowledgeable insider type of flow that's never wrong, especially with these type of telegraphed news events. The probability that you get some late punters is pretty high, I think. I think you also made a really good point as far as the difference between directional, but probably how I describe it is that there's a real difference between having a directional bias and having a setup. So the monthly close could give you, and in the technical sense, does give you a bullish directional bias. But all that means is that you're looking for long setups that correspond with that bias. The presence of a bias itself doesn't necessarily mean that you have a good setup to take advantage of it. Now, maybe that's overthinking, and you could trade it such that, hey, the market has given me a bias, and I'm just going to basically cross the spread and mark it in, and that's that. The bias equals the setup. But from a trade management point of view, invalidation point of view, setting up your sizing point of view, that just kind of ties your hands a little bit, right? So which is why on average you kind of have a directional bias based on the close or the breakout, whatever else. And then it's usually a two-part process where, having established the bias, you then look for a setup that corresponds with said bias. And I think you even gave an example of that, which is, for some time we've written about the friction between the monthly and the weekly timeframes. So, the monthly was at resistance, the weekly was above it. I think purely from a technical point of view, that friction has mostly been resolved. And the monthly is now above resistance, as is the weekly. Just took, a while to get there until the close. Now, if the market dips to that 35, 37 level, I think that will be a setup within the context of a bullish directional bias. That yes, the monthly close was good, the weekly is above resistance. We're now dipping into an area of monthly plus weekly, what should be support if the market is bullish. And that's pretty much where you look to do business, right? You could even make a more nuanced case that you're going to try to buy the weekly level, which is 35K-ish. And while that's under the monthly, your built-in presumption is that if the weekly gets tagged, that's the monthly wick, and that the close will ultimately be above 37K type of thing. So you can really get into the weeds, but I think just in terms of process, that's a good example of going from directional bias to setup to lower time frame execution. That's just one example. But yeah, I agree with all of that. I'm wondering if you have anything in between. So if the market continues to rally or whatever else, whether, 40 odd is compelling to you. We sort of discussed off air how if you really wanted to get creative with it and have some artistic license, you could pretty much add levels anywhere, right? Like the lowest close on the monthly at 38.4, 38.5. Then you could take the other side of that cluster at 45, which is also the monthly range midpoint. Fuck it, maybe you box out both of those candles and call it like a resistance block or something of that nature. The cool thing is, ultimately, whatever resistance does, if there is any, doesn't matter unless it leads to a failure at 35, 37. The real signal, I think, for bears would be a loss of 35, 37, because then suddenly we have this news event that should be positive, but then the market's losing key levels. And then the argument for things being priced in and for this being a sell the news event becomes pretty compelling, both narratively and technically. So that's why I think it's a bit of a sort of red herring, looking for resistance in sort of around 40 or whatever else, because that resistance doesn't really matter structurally and from a swing perspective if it doesn't then lead to a failure at 35, 37. So in any case, 35, 37 ends up being the actual meaningful decision point. Do you think that makes sense?
Yeah, I agree. The problem I have with all of this is basically that we get the ETF decision in January, right?
Yes.
So basically, like if you get a dip this month, like it's a little bit problematic when you think about it. Like you wouldn't want to necessarily already see the sellers start taking control. Like if you start dipping on towards weekly or monthly support, right? And that's a little bit of like a worrying sign where people are actually like just starting to front run it.
Nah, bro, it's just taxes and Wall Street bonuses and yearly flows and fund redemptions. God, we do the same thing every year, don't we? As far as concocting narratives.
But the problem with all of that is basically that it's just like, if it dips this month, do you actually want to buy it? And the answer to that is, to me, not necessarily, right? Because then I would still be in the position where I have to buy into news. That's kind of why I've just been saying like, hey, I just want to, like, I'm just going to take off, because it's going to be complicated as fuck to trade unless you're giga bullish, right? Then it's not that complicated. And I think that's the most reasonable kind of stance. You're just like, fuck everything. This is an ETF. It's bullish. Fuck it. I'm just gonna roll. And fair enough, right? That's the only way. Because if the market just keeps going up from here, like that's the only good thing, like the only good technically setup, quote unquote, that you can have. Because if it dips now, this month, do you really want to buy it? No. If it like so basically this month is a shitty month to trade unless you're just like giga bullish and you think that the market is gonna go up only. In my opinion, like as a bear, do you really want to short right before the news hit? I probably wouldn't want to. And then like as a cautious non giga bull, do you really want to kind of like hold into something like this? Also no. So it's a tough situation to trade, in my opinion.
It's like, I'll buy the 8th green weekly candle. Fuck it.
Yeah, like it's really tough, right? But I mean, could be that we're in the times where you just have to turn off your brain and be bullish. I just generally don't do it. Like even when the market is hilariously bullish, like I don't turn my brain off, which leads me to sit on the sidelines coping while people are happily making more money. But that also tends to kind of save me from holding something that I should not be holding. So like I'm in the situation where like no matter what happens, I will not be able to do anything, which just basically means I'm just not going to do anything. I'm not going to force something where I don't have a setup. I'm not going to kind of like be bearish something that like technically isn't really that bearish. No, I just don't want to do anything. This is too much complication for my simple brain, which just basically means I'm going to take off.
I mean, listen, Don, if you were if one were as vocally bullish as you were at 16 and managed it how you did, you could probably go out on the street and kick a puppy and people would still congratulate you and ask what's next for the market. So not that I'm suggesting you do that. That seems wrong.
I'd rather not. But yeah, I mean, it's been good. It's been good. The whole year has been good. And now I'm happily coping on the sidelines.
Yeah, the market's above your exit. You must feel sick.
Dude, it's never happened before. I don't know what to do.
You're so lost. This is a novel experience. Don't worry, I've got plenty of experience in this realm. I'll hold your hand through it.
Oh, please.
Sounds like you need it. So yeah, monthly good close as far as the important level. sort of average close as far as the less important level. I think that still nets out to good close. I don't know if you agree with that, but yeah, nets out to a good close. The tricky part about both the monthly and the weekly timeframes is that A, news is approaching and the rally has been unambiguously news driven, and B, from a swing perspective, your proximity to validation at this point is quite far, and you're being squeezed both on the proximity to validation side plus the deadline for news side. So it's a bit of an uncomfortable setup from that point of view. The only reasonable solutions there are either turn your brain off and be bullish, and you'll have to stomach vol as a result, and you'll probably only trade spot if doing so, because you can't just turn your brain off and then trade perps. That's how you turn your account off.
Yes.
And the other alternative, I think, as mentioned earlier, is to just compress your timeframes and look at daily 4-hour, 1-hour trends, trade those, and just be acutely aware that there's a non-trivial chance that you get a larger pullback into those monthly, weekly, whatever levels, and you'll just have to eat shit on those and then hopefully reposition as appropriate. I think those are the two sort of most inoffensive options, and I don't unless you take option one, the giga bullish one, as a kind of endorsement of a swing setup, which is tricky to do. Absent that, I don't see like a super obvious swing at the moment, given proximity and validation concerns plus sort of time concerns as we approach the deadline. But also, that's not like a controversial statement as far as the trend, low time frame trend trading thing goes, because that's basically how you execute your system, right? It's like trend follow, trend follow, trend follow, trend follow, and you make money, make money, make money, make money, and then you eat shit. And as long as by the time you eat the shit, which necessarily is going to happen, you've made enough money on the trend following moves in between, that's fine. That's how the system nets out, right? But yeah, it's obviously not as straightforward as it was previously. Do you have any? I mean, we're breaking. We should probably stop recording Casual Friday when the market's trying to break out, because we've sort of semi-stuffed it before, or at least slowed it down. But at the moment, we've had this very interesting daily structure that was basically a diagonal grind up, and now it's breaking out from that sort of consolidation.
It's the slowest breakout I've ever seen. It's actually quite funny.
Is that good or bad?
It's hard to say. I would say, like, usually I like this kind of stuff when it's like slowly breaking out. It's just, if it comes back, right? And there's a big if, but if it comes back towards like 38K, it starts turning really ugly really fast. But I generally, I don't mind slow breakouts, especially if they keep grinding up slowly, because that's basically a disbelief breakout. And people tend to short those because they're like, fuck it. But what happens if this is a slow breakout that actually turns into a failed breakout? Those are the worst ones that you can see. So either it's like it's going to grind up and don't stop and then get a proper pop afterwards, which just basically means a bunch of people are shorting it. Or you get you just stop and you stall out and you kind of round out and go back towards 38, and I think at that point you get just a massive candle to the downside. So it can be good or bad, depending on whether it goes up or down.
Classic technical roundup insight there.
Yeah, but basically what you have to watch in these kind of instances, like if you're trading this lower time frame, is whether it grinds up or down. If it starts grinding down and grinds down towards levels where it really shouldn't go, which in this instance is 38K,
the breakout level, right?
Yeah, basically. At that point, be really, really bad. So anything above there, especially if it starts walking up a little bit diagonally again, is good news for low time frame traders.
Yeah, don't fade the bleed works both ways, right? For downside and upside as well. I also just tried to open Velo to see the open interest changes, because I recall seeing on Twitter a chart that showed there was a real ramp up in open interest for this breakout. And sometimes, as we discussed on the show, you get these mismatches where you look at the effort based on open interest, like how much net expanding of positioning there was, and then you eyeball, and this is eyeballing stuff as most sort of edges are. It's not like mega quantitative. You basically look at how hard are these guys trying to force it, and then what kind of market impact is it having. And generally, you want to see those things not diverge massively. So, for example, an example of something bearish would be like a huge surge in open interest on a breakout, and then the breakout just being weak and not going anywhere, and then premiums spiking at the same time, right? Then you're like, oh, these guys are trying really hard, and they're not getting that much out of it, which is also why bleeds tend to be good, because the positioning for that type of price action is sort of less aggressive, less all at once. And if the market doesn't accept back below the breakout levels, that's pretty, it's a pretty good sign. Now, yeah, again, I couldn't open Velo, so I can't see exactly how much effort, if you will, has been put into this breakout. But I mean, from a technical point of view, it doesn't really change anything. Sort of back below 38K is a bit like, I guess we keep chopping sort of argument. Ideally,
I would even say it goes down.
It goes down. You know what? I was bare PTSDing at the bottom on Monday markets, as always, because I was just looking at this diagonal structure on the 4 hour of like infinite higher lows with not a single spike or like not a meaningful break in market structure. And I just started suddenly speaking fluent Italian. And I was like, there's no way they're going to trap me. All these higher lows, all these trend following people, just one candle to wash them out into like daily support or the range low of something or of some sort, surely. And so obviously the market goes and makes new highs. Do you put any weight to that type of structure when you see this like diagonal walk up? And it's very diagonal with no spikes, breaks, or whatever. Does it at least raise an eyebrow from the days of 2018, 2019? Or is this like a very personal trauma that I've revealed now?
No, I mean, it does remind me of the times, but it's just very different times now, right? So basically, we used to have this price action and usually led to basically zero afterwards.
Zero.
Nowadays, like in my opinion, like these walk ups are actually quite nice. Like when you get these diagonals that just kind of like trend up, and you get these very clean trends with not really stop runs, all that kind of stuff. It's actually like a strong underlying trend. So I'm not a hater. Like I don't think it needs to run anything. I think in general the market that is the strongest doesn't run lows, doesn't punish like the people that are on the right side, because it's very costly to punish the people that are on the right side, right?
Yes.
When the market is really strong. Like imagine you're like, oh yeah, there's a bunch of people sitting at this low, and you sell a bunch, and there's like just a buyer that comes in and just buys everything from you.
Yeah.
And now you're the one that's trapped, right? So what you can do, like in weak trends, is punish people, right? You're just like, okay, these people. You see open interest go up. You know exactly where they're kind of putting their stops, their pain points, and then you're like, okay, fuck it, and it doesn't cost you that much. And if you don't manage to kind of fuck them over, you can still get out of your position, right?
Mm-hmm.
During strong kind of like rallies like this, it's a little bit different. So I'm not a hater of these walk ups per se, but what I am a hater of is when these walk ups break out and then don't stick. And that, like, so far we've literally only walked up. This is the breakout candle right now. So this is the candle that we cannot lose. Otherwise it gets bearish real fast.
Like on the daily specifically is the single candle you're referring to. Okay.
Yes, exactly.
I mean, that's pretty good if you're a trend following bull, because you kind of get at least a short-term new invalidation. Like if you're being very aggressive,
you
have a decent level.
Basically.
Yeah. Okay. I think that's pretty much all we can squeeze out of the BTC side, unless you have any further comments.
No, pretty much it. I think it's pretty straightforward for bull. For bears, the same. Like unless like you trade the higher time frames, are very, very muddy. But the daily time frame is pretty clear. Stick this breakout, and it just looks good. Don't stick this breakout, and completely looks horrendous. And then you can look at weekly and monthly supports like 35 and 32.
Oh, that's how bad that. Oh, that's pretty. I don't know. That gives a lot of weight to this breakout, right? Because that was my next question was going to be, if this breakout fails on the daily, where is support? And I thought you might mention like a higher up daily level, but you've gone straight for the monthly and weekly.
No,
stuff.
I think it you just look at the red candles that you had during this consolidation, right?
Yes.
Like you can see that they're basically massive. So I think like if you start kind of approaching like failed breakout levels, you'd expect something like, maybe it starts off slow, but then you'd expect a massive candle at the end of it. And I think that could take us to 35 on the monthly, or 32, 33 on the weekly time frame. That said, in general, like if you're shorting this because you're like, Don said 35, 32, we still have that whole ETF thing, right? Like if you're shorting and one guy just decides to buy everything up, don't blame me for it.
And his name is Michael Saylor, apparently.
Apparently, yeah.
What a legend.
He's been buying more and more and more and more. Quite wild, actually.
He's in the green now, right?
Oh yeah,
comfortably actually.
Quite a bit. There's an indicator on TradingView that's called MicroStrategy Sailor BTC USD levels.
Oh, that's good.
And there you can basically just put it on your chart and you can see where his average is. I don't know if it's the recent one is in there already, but his average is 29,000 something, which is quite a bit in profit now. Like he's up quite a bit.
Couple of billy, if not more.
Yeah. I mean, he's up exactly 30%, which is a lot.
Yeah. Good. He's see, this is what just being on the right side of a macro trend gets you.
I mean, it's
like the volatility on his P&L, mate. I swear to God.
No. I mean, when he was like at some point he was down like 50% or something on everything.
Like gives me butterflies, mate. At those, with those numbers.
I mean, the Sharpe ratio cannot be good.
Risk-adjusted returns. Thing is, for him personally, as we've discussed, the risk-adjusted returns are amazing. He either becomes like giga-billionaire of the world, or he just stays a normal billionaire. Like, there are no bad outcomes here.
Yeah, and I mean, he has a huge fan club now too, right? I mean, that's worth something.
He's got a cult, I think.
Yeah. I mean, it's a tiny one compared to Elon Musk, right? But you still have like it is quite.
You're just naming your favorite people, Don.
Oh yeah, I mean, I love them. I just like to fight for the little guy, you know, like Elon Musk, Michael Saylor. Those are the kind of guys that need our support.
The rogue underdogs, you know.
Oh yeah. I mean, they fight the big man.
They need all the help they can get from people like you and me.
Exactly.
Fine. That's BTC. I guess the title is going to be something like below 38K. It's over.
I'm down.
Okay, fine, I'll do it. ETH, which is your favorite crypto asset, and you think it's going to flip BTC and it's going to be number 2 forever, according to your tweets, which I read very quickly. Might have messed up a couple of concepts there.
I mean, it's so bad, dude.
ETH BTC, so I mean, look, the most bullish thing is that it's not been moving.
Oh, yeah. But I mean, it had everything, you know, like it got the same ETF announcement that Bitcoin had, which it used to rally from 25K towards, I mean, now it's at 38. It's probably similar. I mean, a little bit less chances that it's going to get an ETF, but in general, like it's the same kind of magnitude of news and it's just been doing nothing, which is quite funny. But yeah, it is what it is.
Yeah, we sort of discussed the weak reaction to news. ETH BTC, I don't think it's super worth updating because it literally hasn't changed in, 4 months, basically. Yeah. Still below 057, which if the market is any semblance of strong, should be a pathetic resistance to reclaim, and this whole thing should just be like a nonsensical deviation. But here we are. We're still there. ETH USD is a very interesting one. You used to point out pretty much every week the rose-tinted glasses sentiment on ETH. And I would sort of find periodic examples of it, but not perhaps reflecting the certainty that you had that the rose-tinted glasses were there. But this past week or so, I think it really came to the forefront as ETH is sort of battling with 2K. This thing gets an inordinate amount of cheerleading. And there are a lot of charts which are basically showing BTC and ETH side by side and saying, implying the catch-up trade, essentially. Whereas my doomer brain looks at those two charts and I'm like, all I see when you compare BTC USD to ETH USD is that one is strong and one is weak. My brain doesn't make the immediate logical connection to, okay, well now it's ETH's turn type of thing. Maybe that's just, shitty trading and I should turn my brain off type of thing. But it's at least as valid an interpretation to see it as relative weakness as it is to see it as a catch-up trade. If anything, the burden of proof lies with the catch-up trade people because ETH BTC still looks like shit. So if you want to make a compelling catch-up argument that this is sort of mispriced, displaced, whatever, you'd expect ETH BTC to at least show up to the party, and then you could start making an argument for catching up. Otherwise, it's just catching up for the sake of catching up. I mean, for example, with altcoins and in markets in general, it sort of doesn't work on its own. Now, I would really like ETH to break 2.1k because I find it insulting that this resistance has stopped an otherwise A+ setup. So the 1935 level, which you've never seen in your life before, that was really good for so long, and it's still good. Like, it's still a great technical level, and every weekly close so far has been in favor of the 1935 breakout type setup. So the fact that it's getting stuffed, or at least has been up to this point, a mere 10% higher with spot ETF news for about a month now, is just depressing. So at least for like TA puritanical TA purposes, I just want fucking 2.1k to break. So then whenever I do my classic spiel on Monday markets or Casual Friday, like, oh, if the market, has a failed breakout once, if it closes above the original failed breakout level, it's usually a full send. I need this to fucking full send for the sake of the setup. Because otherwise, I don't know, man. Like, it's not asking for a lot, is it? That's ultimately what it comes down to. Like, you've got a weekly breakout, spot ETF, everyone loves ETH, as they probably should. Unless your name is DonAlt, and it's like resistance at 2.1k. That can't be the end of this weekly reclaim. That would be very depressing. It has been a very good technical range between 1.9 and 2.1k. So if you're a fan of shorter term trading for a month now, that's just been really on point. But from a swing perspective, I think it's been rather miserable. Do you think 2.1k is going to break, or are you still sort of shit talking ETH in your spare time?
I mean, if Bitcoin goes up 2.1k, it's gonna break basically, and if Bitcoin doesn't go up, I think ETH fails miserably and goes down quite a lot. So it's basically, I think it's basically just completely reliant on Bitcoin, as it has been. Like the only reason why we even see any green candles on ETHUSD is because Bitcoin went up. Like, that's just how it has been for the last months, and a lot of people have just kind of been ignoring it. And I mean, that might change at some point, right? And the fact that it broke 1.99 could have introduced a little bit of upside on the ETH BTC side, but it didn't, right? So I don't know. I'm not the biggest fan of ETH. I think if you want to short something, it should be ETH, and if you want to long something, it should be Bitcoin, until further notice. And I mean, there's other. I mean, even if you don't want to do that, but like, let's say you want to get altcoin exposure, right? I think there's a million better ways to kind of articulate that than buying ETH. Like, there's a lot of other things that I actually prefer over ETH. Just in general, just look at the ETH chart, and it's quite like ETH BTC, and it's quite miserable in comparison to, like, Solana went up a lot. Link has a bullish market structure.
INJ, Litecoin halving.
Litecoin halving is not really kicking in yet, but soon. TM.
It's so mispriced. I've never seen anything like it in my life.
Yeah, I mean, like, there's a million altcoins that actually just have a better chart. Besides BNB. BNB looks like it wants to go to zero, but that's actually hilariously looking on the Bitcoin pair.
What, BNB BTC?
Oh yeah, look, BNB BTC. That's horrendous. Holy shit!
I mean, I would say 4, but I guess 3 is the new thing. Did you see that?
Oh, I mean, that's the most bearish thing I've ever seen. Not gonna lie, dude, they're losing fingers.
Someone tweeted that it's a countdown until Binance implodes, like 4, 3, 2, 1.
Yeah,
that'd be quite funny. Yeah, BNB BTC looks rough. How does BNB USD look? I haven't checked that chart since the news. They need some launch pads, I think.
Oh, I mean, they need the market to go up. If this doesn't, like, this is like in semi-inverse head and shoulders at support. But if this fails, holy shit, where the fuck does it go? I mean, in general, Binance got hit pretty hard. I think people are just kind of watching whether CZ gets any jail time or not, which would be quite the upset, I think, if he did. So, yeah, I think that's kind of what's holding this up. But in general, I don't really see a reason why you would want to own BNB while they're under kind of like, they have a watchdog now, right? And they're gonna be scrutinized 10 times more than anyone, like any other exchange. And I mean, we all know that they really didn't care too much before, but now I think they should and they have to. So I don't know. Like I don't really see a good reason to own BNB, but maybe I'm just a Binance hater.
Clearly,
but that looks quite horrendous. But in any case, I think there's a lot of other altcoins where you can make a better bet on altcoins outperforming. ETH is not necessarily the one that I would pick, and especially not while the ETH BTC chart looks like this.
Yeah, ETH BTC is some concern. But we'll spend a month here, which makes it sound like maybe it's not that bad. Like, why are you talking shit about it? It hasn't really gone down, but it hasn't really gone up either. How's that for an argument? And specifically, it's still below resistance, and quite a big one, quite an important one, which is shitty.
It basically bearishly retested on good news, and then it broke down, and then it consolidated in place. Like, that's not necessarily what you want to be seeing.
No.
And I don't want to hate on this too much, right? Because at some point, I'm expecting ETH BTC to just kind of like actually catch up. But I need a little bit of strength, and I need a little bit of good reaction to good news, or at least like maybe something happens to Vitalik and then price doesn't go down. I'm like, fuck yeah, I can buy it now. I don't want anything to happen to him, by the way. I'm just saying, like, anything, like either like bad news not doing anything, or good news doing something, or price going up. Like, there's so many things that I would like to see on this thing, and I've not seen anything. But what I've been seeing is a bunch of people tweeting about the catch-up trade, like you said.
Right.
And like that combination is just really garbage. That's not the sentiment that you want to have. That's not the price action you want to have. That's not anything you want to have. So for now, I'm not positive on that front.
I still want 2.1k to break. It's so disrespectful, Don. Honestly, like, it's just literally spitting in the face of the weekly setup to keep capping it at some random high, 10% higher.
I mean, it's the worst. Like, it's the worst resistance ever.
It's so bad.
If you cannot even break that, what the fuck?
What are we doing, man? Yeah, I agree. Also, I think from a flows point of view, there might be some relief in ETH BTC as we sort of approach the ETF news. Yes. This might not make any sense, but, you know, like, some people just rotated way too early, like months too early, as ETH BTC was trending down and breaking down. But I could see some flows in favor of ETH BTC as we get closer. And the argument there would essentially be, well, you know, the market looks good overall, and I'm just trying to basically front run the rotation from, well, BTC has had its good news, but crypto is still in a good place. And now that the main catalyst for BTC is close to being over, I still want some upside elsewhere in something that is owned less. I could see that.
I actually don't hate that too much. I think in general, like, starting January, you can make an ETH play. Maybe like even towards the end of December, like that makes at least some sense to me, right? Because I've been basically saying I don't understand why anyone is touching ETH, and so far that's been right. But I actually do agree with you that the closer you get to TETF, the more attractive ETH becomes. But right now it just looks like it wants to die, which is not the best if you want to hold it.
Yeah, so there you go. I've managed to do the impossible and make a convoluted but ultimately compelling argument for ETH buying. So for those of you who feel upset at Don's constant inverse chart doom posting on Twitter, you're welcome. I suppose you just got to wait a few more weeks. I don't have any altcoins I want to talk about, and I also know that you're slightly constrained on time this week, because you've got like a real life and friends and personal commitments. I don't know what those are, but theoretically I understand that they mean you have to go away from your desk, which is something I also can't understand or relate to. Nonetheless, let's blitz through some news very quickly, almost like a hot take round, and then we'll wrap up. Okay. So the first one that I've got is obviously just the window for ETF approval. The window is officially 5th to the 10th of January. This realistically means January 8th, January 9th, January 10th, Monday, Tuesday, Wednesday. Mark your calendars, people. So I think that's actually good advice. Like, mark your calendars, because you're going to want to be at your desk, I think, at least in the week leading up, but certainly like that week is pretty significant and is probably going to be a non-trivial volatility catalyst. MicroStrategy is another one. That's another news article. They bought another 600 million and may raise up to 750 million in new stock sale. As we sort of discussed this as well. Saylor is above water now. I think it's nice that the market didn't sell off on the news that he'd been buying. That's decent.
Oh yeah,
in terms of reaction to news.
It's the first time that we've gotten, or like the first time in a while that we've gotten the news that he bought and price was trading higher, which is quite funny.
It must have changed whoever was doing his exexecution, because before
the
they were running like range high buying simulator 3000 whenever he'd want to buy some BTC.
No, yeah, I think it was just the market conditions just changed, honestly.
But it's like a good sign, right? It's like a better response to news that ordinarily leads to a bit of selling. So good for Michael. I guess we're rooting for him, but also kind of not really, because there's just so much centralization. But number go up, and that's good.
Yeah, for now, it's a good thing.
Yeah, and he can't really sell either. He can sort of lend and raise debt against it, but realistically, just, if MicroStrategy starts selling, even if the immediate sort of market impact or whatever gets absorbed, the sort of implication and the message it sends is basically a non-starter. And he's also way too ideological to sell, I think. So
a bunch of people are kind of like, oh, when Michael Saylor gets liquidated, blah blah blah.
Oh,
I think it's all a little bit bullshit. You can talk about that in like 5 or 10 years if Bitcoin hasn't moved from this price. Otherwise, I don't know. Like, seems a little bit of a stupid argument. Like, if you're waiting for that, you might as well wait for, I don't know, prices to go to zero. Like, these kind of arguments, right? I always struggle. Like the bears, for some reason, is something that is very, like, generally just happens, right? It's the same in any market, but the bears just come up with the wildest shit why the price has to go down, right? Like, there's a lot of reasons for price to go down, but if you're hoping that Saylor gets liquidated, you're just living in a different world. And it's the same with a lot of other kind of catalysts that people are hoping or waiting for. On the bearish side of things, the bulls are idiots in the sense that their targets are always way too high, right? They're like, GME is gonna go to 10 million and Bitcoin is gonna go to 500 billion, whatever. And they're stupid in that way, and the bears are always stupid in thinking up narratives that are gonna make price go down, which is kind of interesting to see every time. I think price can go down, price can go up. For a lot of reasons, you don't have to make up like.
Listen, Don, a global recession is a totally reasonable cost for the world to pay for my out the money puts on the S&P printing.
Fair enough.
Are you saying that's not a reasonable position to hold?
I mean, it sounds quite reasonable when you put it like that.
Reasonable. Especially when you look into the like spikes in just like mortality and how that correlates with unemployment levels, and then you're trading your like 5K account, selling the S&P, like shorting the S&P, buying puts or whatever. It's like, I think there's just a bit of a mismatch there. Like, I want the world to end so my trading account can go up a little bit. It's like, what kind of world are you going to be living in? And your trading account increasing isn't going to make up the difference, Yeah. But I agree. Yeah, often the things that sort of really bearish people use to justify bearishness are so bearish that you wouldn't want to be bullish ever, kind of thing.
Yes.
Which is slightly paradoxical. Because as we discussed last week, I still genuinely believe a lot of bears are bulls at heart, but they have like regrets of some sort. And yeah, if you consider that, then it's pretty difficult to understand why they'd entertain industry-ending arguments. It's like, yes, your limit order would hit, and then price would just like keep going to zero, basically. Fantastic. That's MicroStrategy. We also talked about CME. So Bitcoin long futures open interest held by asset managers hits all-time high. I guess we'll figure out whether that's smart money or not. I think it'll be really interesting to monitor this, like the week leading up to the news and the day of the news as well. If we get any de-risking or maybe they even ramp up into the event, that would be very curious. But yeah, it's an all-time high now. It's the long futures by asset managers increased from 1.04 billion to a current value of 1.98 billion, according to the block's data dashboard. And yeah, this is for asset managers specifically. So yeah, and I think we discussed earlier as well how it flipped Binance in terms of size. So that's pretty big. I still think we often give too much credit for the institutional types, be like, oh, they know something's going on. We do the same with TWAPs, right? Like whenever you see this 5-minute ramp up in price, CVD and open interest, sometimes not CVD if it's limit take, but whatever. Like, just the classic TWAP type of grind up. It's like, oh, someone knows something's happening, and then it just dies and retraces. And then you find out 2 weeks later it was sailor buying or something. So we really love ascribing a level to complexity to entities we don't know very well that perhaps they don't always deserve. The final piece of news, again, just for something entertaining, crypto makes strong showing in Forbes 30 under 30 list of finance leaders. Don, I mean, not that I would ever in my life qualify for anything like this, but I would pay not to end up on this list. This is just like a future jail Hall of Fame list, in my opinion, or at least it seems disproportionately to skew in that direction. Like if your name goes up there, or if my name were to ever go up there, I would be materially worried about my freedom in society.
Yes. Dude, it's a fucking, it's a billboard, like you just put yourself there and then you go to jail.
Yeah, it's like Monopoly. like
it's such like, and the thing is, like, if you actually read into it, and if you understand that you just have to pay for a lot of these kind of...
it's who you know, PR and all this stuff.
Yeah. And I mean, a lot of these things you can actually, like, I don't know if it's Forbes particularly, but a lot of these are actually just paid for. Like in these lists of this and this, the richest people, blah, blah, blah. A lot of them are just paid for, which is really funny because I would pay to not be on these lists. But some people, and it's usually grifters, just really want to be on them, so they pay and then they use it to promote themselves. But I think anyone that says I'm Forbes 30 under 30, you should generally avoid for anything, be it advice or be it literally anything. You should just block that person, never interact with them again. Yeah, because the amount of kind of scammers and just in general bad people you have on these is staggering.
Especially the crypto one is shocking.
Yes.
But it's no different for sort of normal companies either. There's been a lot of fraud through that.
Yeah.
So it's like a counter indicator for credibility or something.
Yeah.
Fantastic. I don't think we're making that list anytime soon, thank God. So
No.
If we do, something's gone terribly wrong.
Oh, yeah. If you see CryptoDonAlt and CryptoCred,
it's over, dude. It's fucking over.
I mean, it'd be quite funny, especially with anonymous, which makes no sense at that point. But yeah,
I feel like we could share a jail cell quite well and get along reasonably.
Yeah, I don't think we'd kill each other.
No, not immediately.
It would take a little bit.
Like a week. That's all we have time for this week, or Don has time for, because, women and families and friends and other alien concepts. But if you enjoyed this week's episode of Casual Friday, do leave us a like, leave us a comment. It was slightly more grounded than last week, so hopefully that was palatable for those of you who enjoyed the circus that was Casual Friday episode last week. The show, as always, is brought to you by Woo. Links available in the description below if you want to support the show that way as well. That's all from us. Have a wonderful weekend, and we will see you next week.
Bye-bye.